Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, lucky December 13th, at about 3:45 p.m. Eastern. Well, U.S. stocks gained ground this afternoon as the limited trade deal between United States and China paved the way for a rise in technology shares. Wall Street's main indexes hit fresh highs earlier in the session as Beijing said it had agreed on the context of a trade pact with Washington. And on that good news, let's go on and look at three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now, today when I captured this chart, as you can see up here, the SPY was trading at $317.21, or about $31.72 on the S&P 500 itself. It made a new intraday high today, the SPY did, at $318.67, or about $31.86 on the S&P 500 itself. It also touched a new all-time closing high this Thursday at $317.13. So we're right there at these new all-time highs. Now we know that it pulled back to about $307 or $30.70 on December 3rd, and then rallied back up to where we are now at these fresh new all-time highs. So, and a lot of this, of course, today has been on the move has been on the trade talks with China, as they do look positive. Now, we've had a lot of positive comments from both China and the U.S. on these trade talks in the last couple of days, as you can see from this rally. And there's bound to be more news about that over the weekend. So I suspect this coming Monday is going to be a very busy day, a hectic day in the market. Next week, we're going to see where these trade talks take us. And if the S&P can break above our current highs, we'll see if it can do that and break above 318 or so, or if it needs to take a rest. Now, quickly, if we look down, we can see that our 14-day RSI, that I like to look at quite a bit, is back up to the overbought line, but it is not as high as it was a couple of weeks ago. And then, of course, we got that pullback or that retracement. Right now, the RSI is at 67.89, about 68. The overbought level, at least in the short term, is if this line goes over 70. And that hasn't happened yet. Now, we could make a case here, a technical case, for the fact that the SPY is making new highs and the RSI is not making a new high. That last high was up here around 72, 73. We could make that case, but that would kind of be nitpicking here. So we will keep an eye on it. This is a great Santa rally for good reasons. I still intend to firm up my stops here on all of my open positions just in case, so I can keep my profits going into the new year. And on to our next chart today. More all-time highs. This is a daily chart of the QQQ, Invesco QQQ ETF, which represents the NASDAQ 100, a very important index in the market. Of course, the top components are the large cap tech stocks and the top non-financial stocks in the NASDAQ stock market. Now, when I captured this chart today, the QQQ was trading at $207.22 after touching another new all-time closing high Thursday at $207.91. So we will see. We're just a little above that. Excuse me, let me see here. That would have been $206.91 on Thursday. So now we're at $207.22, which of course is even higher. We may get a new all-time closing high today. That's what I'm thinking. We will see. We will see in the coming week, again after what probably will be an announcement-filled weekend, if the QQQ can continue this rally and continue on into blue sky territory with the tech stocks, or again, if it needs to pull into a rest stop. Now we've got price support here at the red line, the 20-day moving average at about 203, 204. We have more price support and moving average support at the 50-day moving average at about 198 to 199. And of course, then all the way back down here to 195 and so forth on the QQQ. So lots of support here should we need it. 14-day RSI is just below the 70 line at 67 and change. So it's not a big threat. But again, we have the technical argument that the RSI is not making a new high here while the stock is, or the ETF is. And we can take that as a mild negative because it is a negative divergence, we call it. But let's just see what price does. After all, price is the be-all, end-all to every. That's the final decision. So we'll see what happens in the coming week. Now, again, I am going to firm up my stops just to be my protective stops to stay on the safe side. And by the way, after we look at the next ETF, I'm going to tell you about a really sweet holiday offer with a special free bonus attached to it. So do please stay tuned until right at the end of this program. Finally, today, our third chart is a daily chart of the Van Eck Gold Miners ETF, symbol GDX. The top components in the GDX are Newmont Mining, Barrick Gold, Franco-Nevada, and Agnico Eagle Mines. Now, the GDX, when I captured this trade, was trading at $27.73. This is just what it says it is. It is the Van Eck Gold Miners ETF. And I don't know anything for sure because one never does in the stock market, but it looks like it could be ready for a seasonal rally here. Now we can see that the GDX back in May, and that's typically one of the worst months for gold and gold miners. Back in May of this year, it was trading down around $21. Then it broke to the upside and has marched up in one beautiful uptrend. Nobody's been talking about it, certainly that I heard. Walked right up its 20-day moving average to its September 4th high at about $31. And it pulled back dramatically here, and we could make a nice case, depending on where you want to run your support line. We could make a case here for a head and shoulders, which of course is a top reversal pattern. The GDX followed through with this, but it didn't really make a measured move down as low as one would think it would go. It kind of hung out here under the 20 and 50-day moving average, but it didn't fall way down to the 200-day, the black line. So I've been keeping an eye on the GDX here, as you can see, and we've got this line coming down here, and now, probably should have come down a little lower. Now the GDX, as of today, and actually a couple of days ago, it's back up trading above its 20-day moving average, the red line, the 50-day moving average, the green line, and it's certainly above the 200-day moving average, the black line. Looks to me like maybe it could move up a little higher here. Now, if the GDX, again, right now it's at $27.73. The 20-day moving average is right under price, trying to move up above the 50-day moving average. That's always a bullish sign. So if the GDX, again, continues to rise in the coming week, and it can close above if it can close above $28, and right up here, just above $28 and change, I may add shares of the GDX to my portfolio, my trading portfolio. I'm going to place my initial protective stop down here at 26 cents, $26.20. Excuse me, I don't know what my numbers are here. I'm going to place my initial protective stop down here right at $25. That's currently just below the 200-day moving average. Of course, you can tighten yours up a little if you want. And what I want to see here is if the GDX can climb above nearby, after I add it to my portfolio, if the GDX can move up and then move above this resistance up here, say, let's see, we've got it coming over here, at about $28.50. I may add more shares to my portfolio and see if it can start going back up toward $30 and $31. So in the coming week, you may want to keep an eye here on the GDX. And now on to next week's economic reports. But first, let me tell you about a great opportunity. For this week only, we are offering a 15% discount off of your first month of Toni's Market Club, and we are also giving you my online trader training, 3 winning setups, absolutely free. And we've not done this before. Now, we only offer a discount for Toni's Market Club on a limited basis each year, so you'll want to check out this offer now. It's only good for a few more days. We hold Toni's Market Club online each Monday from 4:30 to 6 p.m. Eastern, and if you can't attend the live session, it's not a problem. The session is recorded, and that recording is placed in your online account just a few minutes after our session ends. Now, during the session, I give you a mini trading lesson and 6 stock picks with entry prices plus protective stop levels and profit targets. And we've been doing this now for almost 12 years. Also, each Thursday, you will receive our Thursday update, which shows you exactly what to do with each trade you have entered. Now, if you'd like more information, please click on the button below. And remember, if you'd like to join us, you get your first month of this already low price value for 15% off and your free 3 winning setups. Just go to the link on this page again, or simply click on the button below. And now for the upcoming week's economic reports. On Monday, we have the Empire State Manufacturing Index. Tuesday, we have housing starts and building permits. Wednesday, we have crude inventories, our usual crude inventories. Thursday, we have the Philly Fed Manufacturing Index, existing home sales, and our usual jobless claims and natural gas inventories. On Friday, we have the PCE Price Index and the University of Michigan Consumer Sentiment Report. Again, join us for Toni's Market Club this coming Monday and receive your discount and free online training program, 3 winning setups. Just click on the button below and get ready to increase your trading gains in the new year. And until next week, do keep green on your screen. I'm Toni Turner, and this is The Market Now.